All right, so last concept of chapter 6 is going to be the lower cost or market, okay? So this one is one of the rules that you can counter against when we were talking about historical cost. If you remember back in chapter 4, historical cost is where when you purchase an item, you must record it at its fair market value or what the original price you purchased it from, right? But in this case, right, when we talk about lower cost of market, inventory is the only exception to that rule, okay? Because here is the idea, okay? When we purchase our inventory, the one thing that we have to remember is that sometimes the longer we keep it in our shelf, for the longest life, right? So if, for example, an electronic, we can already tell that if you purchase electronics as inventory and you're selling them at your store, eventually you will end up having inventory that becomes outdated or it becomes obsolete. And that is why we have to use what's called lower cost of market to determine these values to adjust our inventory accordingly. So with that being said, right, the example of electronics is that is a type of inventory that will not last and it will not hold its cost up to value because due to the advancements of technology, right? There's always something better, greater, better, whether it's quality, whether it's the materials are a lot better, okay? Especially when it comes to technology, right? So those things will become obsolete and outdated. And of course, if you think of it in real life terms, right? Let's say I bought a 2018 laptop, brand new in 2018. Of course, I can sell it for its price, right? But let's say fast forward, it's 2021. Can I sell the 2018 laptop for the same exact price?
No.
Of course not, because due to, number one, the market, number two, due to the obsoleteness of technology, right? Maybe it can't be upgraded to the new Windows, right? So therefore, that is the reason why we must determine how much is it going to cost us. Now, we have a few things that we're going to be comparing, right? We're obviously going to be comparing the market, right? What does the market tell me that this is valued at? All right. And of course, you also have the choice whether you could dispose it or and then what you're going to do is you're going to adjust it into your inventory. Okay. So here is the idea that when you purchase your inventory, it doesn't last long. All right. If you continue to hold on to that inventory as time progresses, right, it will slowly decrease in value. Okay. There's also chances that it could also increase in value too. So let's say, for example, right, wood, okay? You buy something that's actually made out of wood, right? Because the price of wood can fluctuate depending on how many trees are available to make the wooden objects, right? That can also skew your cost either higher because what if there's less supply for wooden objects, but there's a high demand in wooden items, okay? Then therefore, the cost of it's going to raise and increase. So therefore, that's also an example of how it would increase versus decrease, okay? Depending on what the item is and what that inventory item and how you sell it, okay? Of course, but at that time, then we also have to lower your selling price as well, okay? So when we talk about lower cost of market, this is the 4 things I'm going to be asking you, okay? Number 1 is to determine the ceiling price, okay? And also determining, number 2, the floor price. Now, what is a ceiling and what is a floor price? Well, when we take a look at the example, okay, we have like a regular selling price. Now, the question is, what is the maximum amount that you can charge versus what's the lowest amount you can charge, right? So think of it like an actual room, right? If you have a ceiling, that's the maximum. You can't go above the ceiling. And of course, when you hit the floor, you can't go below the floor, okay? And everything that's in between, okay? So that's how we understand ceiling and floor price, right? What's the highest I can charge and what's the lowest I can charge? And these are the formulas that you're going to be needing to know in order to determine the ceiling and the floor, okay? The other two components here, which is going to be determining the market price, is going to be a comparison between the ceiling, the floor, and the replacement cost, okay? It's going to be, we're going to take whatever is in the middle. So whatever's the highest, we don't take. Whatever's the lowest, we don't take. We take whichever out of the three numbers is going to be in the middle, okay? And that's going to be determining the market price. And then the last one is another comparison. Well, which one's lower? The original cost that you purchased the inventory item at or the market price, okay? So let's go ahead and dive into the first example of how we actually apply these formulas into this scenario, okay? These will be given to you because you are not the profit manager. All you are is just a simple bookkeeper, okay? All you're going to be doing is you're going to be given these information. Now, of course, if you do become the inventory manager, this is what you need to do, okay? First, you're going to be given these key factors, right? Your original cost. So whatever item that you bought, right? This is what it originally cost me per item. So in this case, it cost me $5.04 per item, okay? Your replacement cost is going to be whatever research that you've done on the internet or whatever you find out through a third-party vendor or just finding out information on consumers, right? What is the actual replacement cost? What's the value of it now? Okay? And so that's going to be called the replacement cost. So in this case, right, the market's telling me that it is worth $4.89 each. Okay? Now, of course, the estimated selling price for me here is going to be $8.17 because that's what I'm going to sell this product at. Okay? And of course, if I choose to dispose this item, get rid of it, it's going to cost me 87 cents. So again, right? It costs you money to dispose electronics, right? That's the same idea here. It's going to cost me 87 cents per item if I choose to dispose it. Okay? And of course, the profit margin, of course, I want to make at least a 40% profit, which means that if I sell my item at $8.17, I want to get at least $3.28 out of it. Okay? So these are going to be given. Okay? So this is from your profit managers. Again, you're not the inventory manager. You are you're the inventory manager, not the profit manager. So again, the profit manager is going to give you all of these information. All you need to do as an inventory manager is to figure out the numbers, whether you need to increase or to adjust your inventory accordingly. So in this case, these 6 numbers are going to be given. Now, of course, your profit percentage doesn't really matter because as long as you have the profit margin, then you're okay. Okay? So, again, the ceiling price is going to be determined by your selling price minus the cost of disposal. So, in this case, $8.17 is my selling price, and the cost of disposal is 87 cents. So, by doing simple math, $8.17 minus 87 cents is going to give me $7.30. Okay? So that's my ceiling price, okay? So now let's talk about the floor. The floor is going to be your net realized value minus your amount of profit. Now, of course, what is net realized value? Net realized value is going to be the same thing as your ceiling price, okay? Net realized value is going to be your selling price minus your cost of disposal. That's the same exact thing here. So in this case, instead of using net realized value, you can also think about it as the ceiling price, okay? You're going to take your ceiling price, which is $7.30, and you're going to subtract out the amount of profit, okay, which is the $3.28. So again, doing simple math, $7.30 minus $3.28, you're going to get $4.02, and that's your floor price, okay? So step 3, we're going to be doing a comparison, right? Because we need to determine which price is going to be my market price, okay? Is it my ceiling? Is it my floor? Or is it my replacement? So in this case, these are the 3 numbers you're going to compare, all right? You're going to compare the ceiling, the floor, and the replacement cost. So in this case, how am I going to compare it? Simple. I'm going to put it on a number line in order by numerical value. So in this case, I'm doing the highest value all the way down to the lowest value, okay? So my highest value here is $7.30, all right? That's my ceiling. My floor price is the lowest because it's $4.02, and my replacement just happens to be in the middle, $4.89, right? I put the numbers in order and I determine it that way, right? $7.30 is my ceiling, $4.89 is my replacement, and then $4.02 is my floor, right? Now, this is how you're going to determine which is the market value. You're simply going to take the number that's in the middle, okay? So if you remember that little house I was talking about, right? If the ceiling is $7.30 and the floor is $4.02, what's in the middle? What's in between the house? What's in between the air? And that's going to be the $4.89, okay? So you're comparing the 3 numbers in numerical value, and you're going to choose the value that's in the middle, okay, between the ceiling and the floor, or in this case, the highest and the lowest, the highest and the lowest, you're going to take the middle number, okay, and that is $4.89. So that's going to be your market, okay. Last but not least, step number 4 is going to be comparing. Which one's lower, right? You're going to answer the question. Which one's lower? Market or original cost? Or cost or original cost or market, right? Cost or market. So in this case, right, I'm going to literally compare. Well, I have my original cost of $5.02, or I have my replacement cost of $4.89. Okay, so in this case, $4.89 is definitely lower than $5.02. So therefore, your market is going to be significantly lower than your original cost. So that means, with that being said, that means I must adjust my inventory by, I think that's 12 cents, right? 12 cents. I have to adjust my inventory on 12 cents. Okay. Any questions here on how to determine all of those numbers? We'll go ahead and continue some more exercises, okay? So here on the left side, I give you the formulas, okay? So let's go ahead. So we did the very first example here. So if I have an original cost of $4.01 per item, and the replacement cost is $3.92. My selling price is $8, and my cost of disposal is 40 cents. Okay, my amount of profit is 45%, which should yield me $3.62 profit. Okay, so how do I determine the ceiling price? Good. So $8 minus 40 cents gives you $7.60. Okay. Now, how do I solve for the floor? Okay, which is determined as
760 minus uh 362.
362, correct. So in this case, right, we're going to take my ceiling, which is the net realized value, same thing, and I'm going to subtract out that my amount of profit of $3.62, and I should get my floor to be $3.98. Okay? So how do I determine the market?
The number between the 730 and 402.
402 is not there.
Oh, I mean 398. I mean 760 between 398.
Good. Okay, right? The ceiling and the floor. What's the last number I need to compare?
The original cost?
Not the original. Replacement.
Oh, the replace.
So in this case, right, I'm comparing 760 to 398 to 392. Now, let's put that in numerical value order. Which one's the highest one? Obviously, 760, so that's my highest number. Which one's the lowest one?
398.
398 compared to 392?
Oh, 392. Oh.
Yeah, 392 is lower, right? So therefore, that's my lowest one is 392. So that means I'm left over with my floor price of 398 because that falls in between those two numbers. So therefore, my market is going to be 398. Now, let's compare. Which one's lower? My original cost of 401 or my market cost at $3.98?
398, but would it be the 392 instead?
Now, in this case, remember, my market is going to be in the middle between the three numbers. The
Oh,
392 is my replacement. I'm not, once I've figured out what my market is, I don't care about whichever number it is. Because the last one I need to solve for is my original cost versus my market. Okay? Okay,
yeah.
so let's practice one more time, okay? So in this case, last section here, we have an original cost of $3.49 with a replacement cost of $3.05. My selling price is $8.25 with a cost of disposal of 95 cents. Okay? I want a 42% profit, which should yield me $3.50 profit. So in this case, how do I solve for my ceiling?
$8 my no wait. 825 minus 95.
95, okay, which gives you
705.
let's do that again. 825 minus 95 should give you 730. Okay. How do I solve for my floor?
The the 730 minus 350.
Okay, so 730 minus 350. What does that give me?
$380.
$3.80, okay? Now I need to compare, right? My floor of $3.80, my ceiling of $7.30, and my replacement cost of $3.05. So, in this case, right, which value is the highest? Right, $7.30, okay? Which value is the lowest?
$3.50.
$3.50. Where do you get that?
So then it's $3.80. I got the $3.50 in the middle.
So $3.80 compared to $3.05. Which one's lower?
$3.05.
$3.05, right? So that means the lowest value is $3.05. So therefore, which number am I going to choose as my market?
Would it be either the 380 or the 350?
Okay, so $3.50 is the amount of profit. Okay? We don't need that anymore.
Sorry, I threw that in there. So it would be the middle one, which is the $3.80, right?
It'd be yes, $3.80, because comparing, put it on the number line, which value is in the middle, or which one isn't the highest or isn't the lowest, right? Whatever's in the middle. In this case, we have the highest value of $7.30. Our lowest value is $3.05. So therefore, I'm left with my floor of $3.80 because it is definitely higher than $3.05, but it's definitely lower than $7.30. So in this case, $3.80 is going to move on as my market. Now the question is, which one's lower? My original cost of $3.49 or my market cost at $3.80?
The 349.
Your original cost of $3.49. Okay. All right. We'll do some more exercises, okay? After this, there's the exercises, so it will get into more practice of how to do this, okay? All right. Any questions there?
No, just more practice.
Good. Okay. So we'll get there after this exercise, okay?
Funny, I was going to say the same thing, but I was embarrassed.
Don't worry about it. This is a place for learning, okay? So, of course, our job isn't to do calculations, right? Our job is just to journalize. But in this case, right, we only looked at periodic inventory. We haven't even dove into perpetual inventory yet. However, this is what I'm going to show you. This isn't something I'm going to test you on, but it's definitely something that you should know because, again, when you do reach the conclusion where you need to make adjustments to inventory, well, how do you do that? This is where you're going to be using either the direct or the indirect method, okay? This is to either to journalize whether you do it correctly through the direct or indirect method, okay? Now, what does it mean? Now, in this case, right, the direct method is where you're directly taking it off from the inventory and you're putting it through, placing it into cost of goods sold, right? Where the indirect method allows you to create an account for you to, instead of taking it directly out from inventory, you just move it into a corresponding or a contra account. So, right, straightforward, right, direct and indirect method. Now let's go ahead and take a look at what it looks like if we use the direct method, okay? So in this case, here's an example of us buying inventory, right? Let's say as of January 1st, we bought mugs. We bought 1,000 of them, and they cost me $1.25. So therefore, each one gave me a total cost of $12.50, okay? However, let's say a year later, no sales had happened, and it's now December 31st, and I realized that, guess what? The cost of the ceramic coffee mugs dropped significantly, maybe because due to low production, low materials. The cost of materials became cheaper. Whatever reason that it became lower, it is now $1.15. So therefore, the amount that I have now is $11.50. So this is what I have to do. I'm going to, this is under periodic inventory, right? We learned how to convert our inventory, right? We convert it accordingly. We place it into inventory. However, the direct method tells me that what I'm going to do with the amount of loss I took, I don't recognize it. I just assume that I must have sold it when I sold it and lost it through when I sold my inventory. Okay? Which is not correct. I mean, it is valid because you can do that. There's no rules against this. Okay, this is mostly for smaller businesses that don't want to write off as a loss, right? You can use this feature where you can just acknowledge, okay, well, I purchased my inventory, right? I'm now going to convert it into my inventory. And by doing so, right, at the end of the year, which is my given accounting period, instead of recognizing that I have $12.50 worth of inventory, I'm just going to recognize it for what it's worth now, which is $11.50. And what happened to the rest of that $100 that I lost? I'm just going to dump it into cost of goods sold. Okay? I'm going to pretend I sold it, which, again, in reality, that's not really true, but that's what you can do in your books. Okay? And of course, when you're doing periodic inventory, once again, you're going to recognize that you have a difference of the $12.50, right? In this case, this is me going back towards it for the indirect method, right? So then I'm going to recognize that I'm going to enter it in here, right? That I'm going to record my inventory accordingly, right? As what it was originally priced for, which is $12.50, right? And then I'm going to introduce a second journal entry to adjust my inventory by $100 by creating a lost due to market expense account. And what I'm going to do with that, I'm going to create a contra account to temporarily place my my inventory accordingly. So again, I would put my difference of $100 there. And this is under the periodic method. When we realize at the end of the year, when we recognize our inventory, we're going to debit our inventory like as usual, right? We're doing our conversion process here, but at the same time, we're also taking it out into our cost of goods sold. Okay, so there you go. That's the only difference between the direct and the indirect, okay? One of them, you're just strictly not even acknowledging the original cost. You're just going to take the market cost and you're just going to cost it out into cost of goods sold. You just get rid of it through cost of goods sold, okay? Whereas the indirect method, you don't do that. You recognize at full price and then you acknowledge that you take a loss at the end of December. Okay, for the difference, which is $100, okay? Of course, and then we didn't learn perpetual, but perpetual is this. So when we do go into perpetual, you can always come back to this slide. I just placed it in there because, again, we need to, instead of having to revisit this again in the later chapters, this is all the same chapter, okay? So, again, here is a review for this test. I'm not going to test you on whether you know how to use the direct or indirect method. I want you to just simply understand this. How do you solve for the lower cost of market? And if you can determine which one's lower, can you determine to me whether you need to make an adjustment or not? That's all I need you guys to be able to recognize here, okay? So, once again, we have the formulas, whether to solve for the lower cost of market, right? Which, again, is solving for the ceiling, the floor, the market, and the lower cost or market, okay? Any questions?
No. So, just that we're just gonna be tested on.
We're just only be testing on whether you know how to calculate it.
Yeah.
Okay. Nothing about the journal, just because that's a little that's this part right here. It's actually a little more advanced into accounting. And again, it's only if you are the inventory manager itself. But I do want you to recognize, because as a inventory manager, right, you're the one that's calculating the amount. However, the bookkeeper, their job is just to record, right? And because this class is to teach you to bookkeep, right, to record, I'm just going to throw it in there. This is what you do when you do have the lower cost of market and you need to adjust the inventory. How do you adjust it? And under periodic inventory, under the direct method, you would just take it out directly from inventory and put it into cost of goods sold. Or indirect method, you recognize the loss. Okay, so that's just, again, extra information, but I'm not going to test you on it. Okay. Any other questions before we move on to the exercise?
No.
All right, so here are, let me see, a lot of examples of practicing how to use the lower cost of market. So again, you will be given 6 figures, okay? 6 figures, okay? And your job is to solve for the last 4, which is the ceiling, the floor, market, and determining whether which one's lower, the original cost or the market, okay? So these 6 digits are given, okay? I will be providing this for you on the exam as well, okay? So for the very first example here, we purchased chips, okay? Now, of course, we purchased them at 89 cents, okay? And maybe this is a limited edition chips, right? You know, oftentimes you'll see like chip companies, they'll test out a flavor and then next month later it's not doing well, take it off the shelf immediately. So that's what happened here. Now the chips became they don't produce it anymore. So now it dropped the value to 49 cents. Okay? And of course, when we sell it in our store, we sell it at $3.99. In order to dispose it and get rid of all the chip bags, it's going to cost me 15 cents per bag. And then, of course, I want the amount of profit. Again, I want to earn $3.05 out of it. Okay? So in this case, how do I solve my ceiling price?
Selling minus cost of disposal.
Okay, selling minus cost of disposal. So $3.99 minus 15.
$3.84.
$3.84. Okay. Now, how do I solve for my floor?
Ceiling price minus amount of profit.
Ceiling. So $3.84 minus $3.05.
79.
79 cents. So again, we're going to compare 3 numbers, right? We're going to compare our ceiling, floor, and replacement cost, okay? So what we're going to do is we're going to put it on a number line, okay? Which is the highest value out of the 3 numbers?
The 384.
384. Which one's the lowest out of the 3 numbers?
Replacement.
Replacement. So therefore, the only number I'm left over with is my floor price of 79 cents, and that's going to be determined as my market because it falls in between the highest value and the lowest value. It's the middle number. Okay? So therefore, last question is, what is lower? Which is lower? My original cost of 89 cents or my market cost, which is 79 cents.
Market.
Market is lower. Okay, great. All right, let's keep going. So now this time I bought some cups. Yes,
That's not too bad as long as you have all of the numbers already.
correct.
As long as you have the other the screen where it had all of your equations, then it's not bad.
Yeah, of course. So in this case, right, this is as simple as get as long as you know which numbers you're plugging in. That's all about it, right? Okay. So in this case, I have another inventory item. I bought some cups. Maybe they're seasonal cups, okay? So I bought them for $2.59 each. However, due to the holidays being over, they are telling me now that these mugs or these cups are worth $2.49 each. Okay? I sell these cups in my store for $8.99. To dispose them is going to cost me 75 cents each. And the amount of profit that I want to get out of it is $5.84. Okay? So, what is my ceiling price?
The 8.99 minus the 0.75, which is 8.24.
Good. $8.24. What is my floor going to be?
So selling minus the amount of profit.
Ceiling minus the amount of profit of $5.84. So therefore,
Is 2.40.
my amount is going to be $2.40. Okay? So then I need to compare my three numbers, right? Which one is low? Which one's the highest number out of the three? Highest.
The 8.24.
824. Now, which one's the lowest? Is it going to be my replacement cost for $2.49, or is it going to be my floor price for $2.40?
The floor price.
The floor is going to be the lowest. So therefore, my market is going to be $2.49. Okay? Because that one is in between the middle. Okay? So then, which is lower? My original cost of $2.59 or my market, which is $2.49?
Your market.
Your market is lower. Okay. Now again, oftentimes, especially due to the market costs and just how like it fluctuates all the time, products are being produced all the time, right? We live in a consumer society. New products, new innovative ideas are going to come to life. So at the end of the day, you're more likely to take a loss than you would gain. Okay. So in this case, shirts, right? I bought my shirts for $1.98. The market's telling me that it's cost you now $1.66. And then, of course, I sell these shirts for $4.99. And to dispose them is going to cost me for 22 cents, excuse me. And then, of course, the amount of profit I want to get is $2.99. So, what is my ceiling?
The 4.99 minus the 0.22, which is 4.77.
$4.77, okay? What is my floor?
Minus the 2.99, which is the 170. It's one.
No, 178, okay? So again, let's compare the three numbers, okay? So I got my replacement of 160. I'm sorry, yeah, 166. I have my ceiling at 477 and my floor at 178. Okay, so which one is in the middle? So which value is the highest, which value is the lowest, and which one's in the middle?
So the ceiling price is the highest,
Mhm.
the 4.77, and then the the lowest is the 178, and the replacement, which is the market, because it's the middle one, the 166.
Okay, let's compare. Is 166 higher than 167 or
Oh no,
178?
no, whoops, no. The middle one is the Florida price, the 178.
Good, right?
Yeah.
Good. Okay. So now let's determine which one's lower, my original cost of 199 or my market at 178. Right? Your market of 178 is lower. Okay. So then let's talk about pants, right? We purchased some pants at $5.25 each. To replace it's going to be $4.98. I sell it for $14.99. To dispose, it's going to cost me $1.85, and my amount of profit is going to be $8.15. So once again, how do I solve for my ceiling?
So selling minus cost of disposal, so 14.99 minus 185
Mm-hmm.
is 13.14.
13.14. Okay. How do I solve for my floor?
Ceiling price minus amount of profit.
Okay. So 13.14 minus 8.15.
Which is 499.
$4.99. Okay. So let's compare. Which number is the highest? 13.14, right? Which one's lower? $4.99 or $4.98?
The 498.
$4.98. So therefore, my market is going to be $4.99, right? It beat it by 1 penny, right? So in this case, again, let's compare. Which one's lower? $5.25 or $4.99?
499.
$4.99. Okay. All right, we got 4 more examples here. Okay. So this one here, ooh, I don't know why I did that. Okay. I think it's, there you go. So again, here we have some hats that I bought for $2.58. Okay. To replace it is going to cost me $2.05. I'm sorry. Replacement cost doesn't mean that. Replacement cost means it's going to tell me that it's going to cost me $2.05 instead. I sell this hat for $9.99. To dispose, it's going to cost me 59 cents, and the amount of profit is $7.49. So, what is my ceiling?
Selling price minus cost of disposal, 9.99 minus 59 cents, so that'd be 9.49.
$9.40. Okay,
Sorry.
no worries. All right, so then of course Excel's catching on. So in this case, my floor is going to be my 940 minus 749, which should leave me 191. Okay, so let's compare again. Which one's the highest number?
The ceiling price 940.
940, okay. Which one's the lowest value? 191 or 205?
The floor price.
The floor is the lowest. So in this case, my market price is going to be my replacement cost of $2.05 because it falls in the middle. Okay? So now the question is, which one's lower? My market of 205 or my original cost of 258?
Your market.
Your market. Okay?
I have a quick comment.
Yes.
For floor price,
Mhm.
isn't that selling price minus profit amount? So isn't it 940 minus 749?
It's
Where did 191 come from?
ceiling price.
Okay, ceiling 940 minus amount of profit is 749. Where did 191 come from?
The ceiling is 940. The amount of profit is 749.
I'm doing it in my head. So I'm doing 749 minus 940, so I get 9 cents in my head. Sorry.
Okay, no worries. Okay. All right. There you go. Okay, so it's ceiling, not selling. Ceiling minus
That's good.
amount of profit. Yeah.
Are we eventually doing these on our own sheets as well?
Yes, you're supposed to be following along with me, but I mean, it's up to you. Again, I encourage you to watch and then do it. Does it make sense?
Yeah,
So
because
what?
I've been watching you doing it, but I'm trying to do the calculations, whether it's like on my phone or in my head, and then I get them wrong, and then I feel dumb.
No worries. Okay. Again, the worksheets on the webs on the Google Classroom. It's there for you to practice as well. But that's what we usually do. We do the exercises together in class. All right. And then of course I'm recording this, so then when you do go back over it again, you'll know exactly what you did. Okay. All right. So, all right. So now we bought some toys for $1.05. It's telling me that now it's costing me 98 cents. I sell it for $6.99. It's gonna cost me 11 cents to dispose, and I want $5.81 profit. So, what is my ceiling price? $6.88. Okay, right? You're gonna take your $6.99 minus 11. Okay, and then what is your floor? It's gonna be your $6.88 minus $5.81.
107.
107. Okay. So let's go ahead and compare. Obviously, the highest number is 688. So let's compare which one is the lowest. Is it going to be 98 cents or 107?
So the highest one is the ceiling price.
What's the
And
lowest?
the replacement cost.
The replacement cost is the lowest. So therefore, my market is going to be
The floor price 107.
correct because it falls right in between the middle. Okay. So once again, now we're going to compare. Which one's lower? My original cost of $1.05 or my market cost of $1.07?
The original cost.
The original cost of 105. So yes, this can happen where when you do calculate, your differences could be a penny or 2 pennies off. So you have to be very, very careful into looking at this, okay? So in this case, right, when I did my lower cost of market adjustment, right, it was too soon because in this case, the value of the item, which is my toys, didn't make a huge impactful difference, right? Because in this case, I probably did it like a month later or 2 months later. So that means this toy is still holding up its value. Okay. All right. So now we got some pens. I bought them for 78 cents. They're now worth 33. Okay. And of course, I sell them at $2.99, and it costs $7 to dispose, and the amount of profit is $2.24. So, once again, what is my ceiling price?
Go ahead.
Sorry. 299 minus 07, which is 292.
292. What's my floor?
the 292 minus the 224, which is 68.
68 cents. Okay, so let's do the comparison again. Which one's the highest number?
The highest number would be the selling price, ceiling price.
Of 292. Now in this case, which one is the lowest? Is it going to be the replacement cost of 33 cents or the floor price of 68 cents?
The replacement, the 33.
Correct. So therefore, my market should be the 68 cents, right? It's the number that's in the middle. So let's compare and contrast, right? I originally purchased them at 78 cents and the market is 68 cents. So which one's lower?
The market.
Good. Okay. Last example for the day, okay? Here we have a laptop, okay? We originally bought this laptop for $584.60, right? The market is telling me now that it's now cost $562.17, okay? $20 difference. Here, I sell it for $849.99. To dispose, it's going to cost me $129. And the amount of profit I want to get out of it is $127.50. So, what is my ceiling price?
The 49.99 minus 129, which is 720.99.
Okay. Whoops. Whoa. Those are not correct. Okay. Okay, what the floor is. But anyway, so what is your floor price going to be? Oh, gosh, I keep doing that. Okay. What's my floor going to be?
$593.49.
Right? You take your ceiling minus the profit, $593.49. So let's compare which is the highest value.
The ceiling price.
Okay, a 720. Now, which one's the lowest value? Is it going to be your replacement cost of $562.17, or is it going to be your floor price of $593.49? The replacement's the lowest, so that means the market is going to be, okay, it's going to be it's going to be $593.49, right? Because it falls in between those two, the highest and the lowest. So then let's compare. Which one is lower? My original cost of $584.60 or my market cost of $593.49?
The original.
The original cost of $584.60. Okay? So this is the lower cost of market. Once again, I'm only going to be testing you on whether you know how to calculate this or not. Okay? Any questions in regards to calculations? Okay?
Not really.
Okay? So, last announcement for today. So again, we are going to be